Yeah. Can you guys see?
Okay, I will go quickly through a lot of this because it may become a surprise, but Rob and I are in violent agreement on a lot of these topics. This actually originated as a presentation I gave to a House committee a few months ago. And a lot of this is stuff we already know. I'm not going to go through the economic dregs. But it's important to know we're in the middle of a fundamental economic shift, very much like the 1980s in Oregon, in terms of what's going to change. It is largely a jobless recovery. It'll be that way for the next several years. What's different this time, it started in the recession in 2000. For the first time, net migration was positive in Oregon. We had net in-migration, I should say. During the 2000 recession, that was the first time in the state's history during a recession that we didn't lose population. We continued to gain population. And we're continuing to gain population now. So people are coming here in spite of the fact that we still have a 10.7% unemployment rate. We've all talked already about the political economy of green, but it is largely going to be a hollow promise unless we do some things differently, some of which Bill Campbell talked about. A number of you know me already. I'm sorry about that. But for those of you who don't, I've been in the seed stage venture business here since the mid-'80s. A managing partner of 7 funds. We're currently raising 2 funds concurrently. We've invested historically in enabling technologies in energy, environment, life sciences, and related information technologies. So while I agree with a lot of what Bill was saying, the reality about the energy and environmental sector is we still need fundamental technologies to make the switchover, which happens, unfortunately, at an incremental pace. So, a lot of you who are involved in economic development, for years and years and years, we've been told, jack up your R&D base, and Oregon's done that. Over the last 23 years, we've had about a 6-fold increase in this is peer-reviewed R&D. This is not. This is an apples-to-apples comparison to the states that are on this chart. So this is peer-reviewed NIH, NSF R&D dollars. So the next slide is how we stack up from a perspective of patents that are issued to Oregon residents. Don't start saying, oh, that's Intel and HP, because all the other states have companies just like that as well. So these are residents of Oregon and patents that are accrued to them, also from the university system. So we've been doing the right thing there. Going to what Rob was just saying, what's happened especially over the last 10 years. So in 2009, there was, I'm sorry, it's 2008, $28 billion in venture capital funding in 2008. But what happened over the last 10 years, increasingly more and more money went into the Bay Area, disproportionate to other regions. So the Bay Area continued to grow over the last 10 years at a loss to the rest of the region. Now, in spite of a lot of the discussions happening, my talk is going to focus primarily on venture capital, and the reason being is around funding of critical innovation in this state. So that's why I had the preceding slide. So I wasn't quite sure the room was going to be like this. So going to what Rob was saying, I'm doing a comparison between Oregon, Washington, and Utah. So other states in the region are fairly comparable. When you divide the population by the gross state product, look at the university R&D, there's actually a lot of comparability between Washington, Oregon, and Utah. But here's the problem. Over the last 6 years, if you look at 3 distinct categories in the venture capital analytics, seed stage, startup, and early stage, Washington on average has about 126 million per year, Utah has 37 million per year, and Oregon has $17 million per year. In those 3 categories in initial financings, that means the first time those companies ever raised money. So we're trying to fuel an innovation economy on about $17 million a year, plus the angel investment. And part of what's driving this, I didn't put Washington on here because it dwarfs the chart, but this is total venture funds raised by in-state managers. And if you look at Oregon, historically, we have these little blips where a new fund gets formed, relatively small in size, and then we go literally for years with no new money being raised. over the last several years, Utah has raised a considerable amount of money, and as I'll show you in a minute, is investing it in state quite successfully. So, don't hit the second. No, that's okay. So one of the issues that we also continue to beat up folks like Dana Bostrom about is, well, we don't do technology transfer very well here. So,
I never hear that.
No, I know, and you don't, yeah. So, Jeremy, go ahead. So, this is the chart we showed earlier. What was the increase over the last 23 years in R&D? So you see, comparing Oregon to California, Utah, Silicon Valley, and Washington, we've done a tremendously good job in increasing our R&D base. Now hit the next one. So what this is the ratio of venture dollars invested in that geography to that number. Oregon has 40 cents. If we did the numbers this year, it's 22 cents of venture money for every dollar of peer-reviewed R&D. The Bay Area has $8. So when you say, well, gosh, they know how to do tech transfer in the Bay Area, yeah, there's a lot of money. So there's money available to fund early stage ideas. The money here isn't available for that. And by and large, historically, in this region, angels aren't the ones that have funded technology commercialization. And historically, in the venture capital business, the VCs were the ones that focused on that part of the market. So what have we done here in Oregon? Well, we've had the Oregon Growth Account, and since '99, we've invested $91 million into 17 funds, but only $34 million of that has gone into Oregon-based funds. And right now, only one fund actually has available capital. That's an Oregon-based fund. The OIF, since 2005, $108 million has invested in 11 funds, none of which are headquartered here in Oregon. So comparing this to one of the nearby states, so Utah, at the same time started a fund of funds, also $100 million. They've invested in 27 funds. 8 of those are in-state managers. That's 80% of all the in-state managers, as opposed to compared to Oregon, which has no money in in-state managers. And they've invested in 38 companies with $1 billion in total investment, $204 million coming from the Utah fund managers. Oregon's had about, this is an estimate, 13 companies, 11 of which are still alive, and about $250 million has gone into those companies. So what are some of our options? So we can, going forward, well, we can do wealth redistribution. Bill alluded to that partly. So in the US, we've got 130 million jobs. 20% of those, about 26 million, pay over 60,000 a year. So not a lot in terms of angel money. And in Oregon, 173,000 tax filers have income of between 100,000 and 249,000. 86% of those are dual filers. 32,000 are 250,000 or more, and 88% of those are dual filers. Now, I'm going to read you something. Christopher Dodd, in his finance reform legislation that's being dropped as we speak, has a proposal in that under Section 412, which would change the terms of accredited investor from what it currently is, which is $1 million in personal assets, an annual income of 200,000 or more, or 300,000 or more if you're a joint filer. And it would be changed to adjust with inflation. And if you use the current inflation numbers from the Department of Commerce for adjustments, that would change that number to 388,000 and 582,000 respectively. So we would basically wipe out the angel investment community in this state. The second part is really a killer, which is they would deregulate Regulation D filings, which currently, if you raise money as a startup, generally most startups I know of raise money across state borders. Regulation D harmonizes that across those state borders. Senator Dodd's legislation would turn that over to the states. We would basically take startup finance and take it to a screeching halt, as every state has its own Regulation D filings. So the paperwork